Welcome to the trading week, news trading for the week ending the 4th of the September 2015. Now what we have straight off the bat is the ANZ business confidence. It's one I did trade, made a few pips, got in and out, used a maze with a 40 gap because generally Monday nothing much is moving too much, so you can afford to have a smaller gap. 10 pip take, 15 pip stop loss. Made my 5% on my account balance, so already ahead of the game with a nice 5% right there, which is great. But that's really about it for the day. You can trade the CPI flash estimates, but it's a very hard one. I don't normally trade it. Doesn't move too much. You've got other things there with it that will kind of relate to it, so I would suggest not trading that one. Then we go into Tuesday. Now, the overall consensus for this week is a strong US and a strong sterling, pretty much rebounding from last week from a bit of the weakish sort of tone that they had for the last few weeks. The sterling especially had dropped a fair bit, but with the strength from the US and basically a lot of the speeches that came out from the symposium over the weekend were all generally positive. They said they're not that worried about the Chinese situation. It's not going to have an effect over whether they're going to hike rates or not. So that puts the actual strength back in those two currencies. So for this week, you're looking at buying the US and buying the sterling. Aussie, you'll kind of have to wait. That's what I'm getting to Tuesday. You kind of have to wait for this sort of news data here coming out from China and Australia. This might give a bit more of a tone on what's going on, and especially this statement here will give the tone on what's going to happen for the Aussie for this week. But generally, bad Chinese sort of stuff, I think the Aussie will end up getting weaker and weaker. Even though commodity prices are getting a little bit better, you will still find the Aussie has probably a little bit of weakness still to go. Oil prices might be able to give a bit more strength back to the Canadian dollar. So for now, it's not on my marker for a trade, just purely because oil prices are having such an effect on it. And the oil prices are kind of going up and down a little bit. So the weaker ones, I'm looking at the weaker Aussie, weaker New Zealand for my main sort of sells, and the sterling and the buck or the US as my main sort of buys. There will be other opportunities, but they're the ones. To trade this one here, you're looking at basically waiting for all this data to come out. Wait till then you get onto the 11:15 sort of time, and if it's all going in the right direction, hopefully all negative, then you will be able to put a nice negative sort of amazing indicator there to try and get another 5% on your account. So if you can do that, you might be able to F and G it if it comes up in F and G. It might, and it's a large enough deviation. You might be able to go for an 8 to 10% on your account. But realistically, I'm going to be sticking to 5% this week and just try to get my 5% throughout the week and to build it up. Now, a good way to have a look at this cash rate and RBA statement, you can always put an FNG on the cash rate. Now, it's not going to change, so realistically, it's kind of pointless, but just in case, who knows, it might. So you can put one there anyway, just to make sure that it triggers it if it is going to change. But everyone's going to be listening out for this RBA statement. If you've got an audio squawk, then listen to it. Jump in as soon as you hear something for a 20 pip sort of take. Alternatively, you can sort of trade this at the start of the London if it's big enough news. So if you kind of have a look, it's moved a lot, you think you've missed out, you might be able to find by about 4:30 our time, you may be able to jump back in again if it's had a bit of a pullback, and then all the London Euro sort of traders are getting involved. They want a piece of that action too. So it is possible to do that as well. Now, the manufacturing PMIs, I'm not going to worry about any of these just purely because the sterling manufacturing PMI is a lot more of a larger scale one. That's the one you'd rather be trading. So I'd probably have an amaze of about a 60 gap. Same with like a 10 pip take, 15 pip stop loss. I'd also use the FNG as well for a bit of a longer term sort of trade, so you can get in there for a bit. As if it's a nice big deviation, it can give a lot more strength to an already strengthening again sterling. So hopefully that is strong, because the sterling had a bit of weakness last week, and we might be able to make a lot more pips due to the fact where it is. It's not oversold or overbought. It actually is in a good region for it to be getting stronger and stronger. So you'd be looking for a nice strong deviation here. Canadian GDP, I would be trading that one. It is during the London-New York crossover, so you might be looking at a 70-80 gap, a 10 pip take, 15 pip stop loss. FNG as well, just for a big enough deviation. I look at my deviations by basically in the high and low from the upcoming risk events. You can do it yourself just by clicking on these and going back through and having a look. Now to do it, you don't really want too much other news going on. So this one here is a 0.2 sort of deviation. So it's basically going back through and doing your own research. And a 0.2 deviation gave it a nice large spike for the US, meaning it was a bad reading for Canada. Now, you don't want to go with when there's a bit too much news, especially US news, because it'll move other currencies. So just try and have a look at these. This one here is a negative 0.1. Just see if that actually did anything. And it was a negative 0.1, and yet it had a positive effect. So don't know what was going on in March exactly. I don't really remember, but could have been other US stuff going on. So just maybe have a look at the Aussie CAD, see if that had the same downward spike, and it did. So something's gone on here where it's negative for the Canadian dollar, negative 0.1. Maybe if you're reading about it, they thought it was going to be more negative, or whatever reason. You got to go through, do your research, have a look at it, and then you can set your actual take profits, your stop losses, your deviations, and things like that, based on doing a bit of research yourself when you go back through. And last but not least is the ISM manufacturing PMI. So there's a big day on Tuesday. Now you'd be looking at a 70-80 gap, 10 pip take, 15 pip stop loss, FNG for deviation. So very much the same, that guy, and even manufacturing PMI. This one here, because it's not a crossover, you might be able to have your gap a little bit less on a maze. So probably worth doing. And realistically, I'm just going to be trying to take 5%, 5%, 5%. If I can do that with my 5% I've already got here, I'll also be using casino this week and trying to make 5% off that. So realistically, by the end of the week, if you could see that building up 5% every time. So stick with me, and basically I will be doing some more videos as well with a live account. Bit of a low one, just to show how you can build it up, making 5% as you go by what I'm talking about. So doing a maze, a casino, things like that. And I'll probably do some live trades on there with a live account and just show you guys what I mean by some of these things. Wednesday, bit of a quieter day compared to Tuesday. So we've got the GDP, which is a large one, quarterly. Again, these two normally go in unison, so you can still afford to have a tight gap. Just the Asian session, you could go for a 40 gap. It's a big mover, so you can really do a 15 take or a 20 and a 20 stop loss. You can F&G it to maybe a 8% to 8% risk reward, because if it is a deviation in the negative direction, make sure you pick those currencies that have a bit further to go, not ones that are right down to a oversold situation, or if it's at its 7-year low or something like that, like New Zealand, US is getting close to again. You wouldn't be doing it to bust through that low. So just pick your currencies that you're going to pair it with. Construction PMI, it's not a massive one. Depending on how I've been going through the week, what I'm doing at the start that time, I may not even trade it. But if you were, you'd want a small gap. You'd probably have an 8 to 10 take, 10 to 16 stop loss. I'll probably have my risk reward even lower, like a 7 risk to 4 reward. F and G on a large enough deviation, but even then, like a 6 to 6 risk reward, sort of thing. And then you're leaning into the non-farms anyway. This is the ADP, so not the big one that happens on Friday, but it's big enough for people not to really be looking at the construction PMI. This guy here, it's always a big one. Anyway, like that one, and the non-farms here. This one does still, it won't move the market for as long, but it does move. It gives a nice initial spike that you can use Amaze on to get it. So Amaze 70 gap, 15 take, 20 stop loss, 8 to 5 risk reward ratio. FNG on the deviation. Again, I'm not going to go through and tell you the deviations of all these. It's something that you can look at yourself on the FX News Edge, which you can get for free, and the Forex News Calendar, or you can get information off of the Forex Factory Calendar as well. So yeah, you can click into these guys and it will give you a bit more information. So that's how I'd be trading that one. Now on Thursday, retail sales, which it's an easy one to trade, easy one to get your 10 pips. You could, it's one of those ones where it's like clockwork, really. So if you're feeling, a little bit like you've done well through the week and you want to up just a little bit, you could put up your risk reward just by 1% if you want to give it a go if you've done well. Worth doing. Trade balance won't really move it that much. It's not, unless it's a huge negative trade balance, which is possible. But you'd be thinking retail sales would be a negative then anyway, and it'd all be in the right direction. Either way, retail sales, good one to trade. Do a 60 gap, 10 pip take, 15 pip stop loss. And the trade balance isn't as big. It says high impact, but generally it's going to be negative. It's only if it comes out some ridiculously negative figure or a ridiculously positive figure and the retail sales is negative that you're going to get a lot of chop. But very much doubt that. Service PMI, you wouldn't be trading the euro for this guy, just because the retail sales coming up half hour later. So don't pair it with that. So you'd probably be doing, and there's so much euro news beforehand. Similar sort of case, you'd just do a 60 gap, 10 pip take, 15 pip stop loss. FNG on deviation. There's a lot going on. There's a minimum bid rate. Just FNG that, just on, that's the cash rate, so that's the interest rate. Hasn't changed for a while. Not going to really change. I very much doubt it, but still put a FNG in there just in case. Then we've got the Canadian trade balance and the US trade balance and things like that, and an ECB press conference. So there's a bit going on in this little chunk here. The unemployment claims won't do anything. Don't worry about the US trade balance. But what you can do, if it is a large deviation, it's the only reason why I trade these is if it's a large deviation. So you could trade that one, but we're already trading the retail sales, and that's more important. So on the Canadian one, just a large deviation. will make a difference. Now I could see this being a negative figure. It's thinking it's a negative figure, as in oil prices haven't really made a change this yet. So if it is a negative figure, you may not get that much of a negative aspect to the Canadian dollar if oil prices are continuing to go up. It'd be very short-lived. So it's probably not the best one to trade. Trade balance here, it is meant to be a little bit more positive. You could put a deviation sort of trade on that one. Remember, an hour and a half though, after you've got the ISM non-manufacturing PMI. So you'd probably use a 70 gap on a maize, 10 take, 15 stop loss, FNG on deviation. And then Friday, where we're leading into the big boy, the non-farms employment change. You can actually do on the average cash earnings. It doesn't really spike, but it tends to give direction for the yen. So if you did a bit of an FNG on this one with a nice deviation, you might find you can sit in there for half an hour, and ride it a little bit. You could probably put a trailing stop loss on it, and let it go up a bit. It doesn't have an initial, large impact straight away for some reason. If you go back and have a look at what I mean when you click into it, you'll notice that for the next half hour from that reading, it will tend to go in that direction. So I will be trading that one, and I will probably have a trailing stop loss on that guy just to follow him up. Now, speeches, things like that, any sort of news leading up to the non-farms, don't trade it. I will trade this guy because it's 11 hours before this news release. There's no point trading anything until the non-farms because everyone's waiting for this. So I wouldn't be trading the employment change. I will just be trading the non-farms. Now this one here, you want a 10, 15 gap, 15, 20 take, 25 stop loss. It's a big one. It is what they're looking at, and anything really above 200 will be positive. So if you do an FNG, you probably want to make the FNG for under 200 for it to be negative. And really anything above this figure here will have a reasonable positive spike. Now, even though this is a low or medium impact, average hourly earnings is something they're looking at a lot these days. You can get a little bit of chop with a positive one there and a negative one here. So it is something to be wary of and to be careful when trading. There's not much you can do if you get a really big swing. The only thing you can do is have your gap a lot bigger, and you can really just trade one direction, and if you miss it, because you've put a negative one on and it's a positive data, then you miss it. It's better than getting whipsawed and getting kicked out of both trades on Amazing. So I'd probably be doing it on positive note here, just one direction, trading it so it's going to get stronger. And if it's negative, then it's negative, and I miss the trade, and hopefully I don't get whipsawed into it. But as I said, if you're going to go both directions, you can do it. You want a big enough gap though, so that any whipsaw with a positive average earnings and a negative non-farms, or a negative non-farms and average earnings and a positive non-farms, isn't going to trigger both directions. You probably want a smaller swain on there as well, so you're not having it for 30 seconds. Your swain could be like 5 seconds. And then the Canadian IVPMI, it is, if you still got some direction from the non-farms, use that. And realistically, a 70 gap, 10 pip take, 15 pip stop loss, FNG on deviation. And that's about it for the week. So I will be doing some other videos, and I will be trading on a live account and showing you some of the trades. So good luck.